Hello, Jed Gibson speaking from Summit Funding. Good day. Hey, I normally do these via email, and we have so many emails coming at us every day. And if you're like me, I'm becoming a lot more acceptable, I guess is the word, of watching quick video presentations or messages. So bear with me. I speak in front of a lot of large gatherings, but when I get to speak in front of this little camera in front of my peers, it's a little more nerve-wracking, believe it or not. So I don't know why that is. We can speak in front of thousands and it doesn't bother us, and speak in front of hundreds and it's nerve-wracking. But listen, speaking of nerve-wracking, we've been telling you to circle September 18th on your calendar for quite some time now. That was going to be the time that the feds were going to start announcing whether or not they were going to start tapering their $85 billion a month worth of purchases in both treasuries and MBSs that they've been doing through the QE program, QE3 actually, for quite some time now. And September 18th is less than 24 hours away. That's obviously tomorrow. And it's the most widely anticipated FOMC meeting that we've seen in years. So um, uh, on the forefront of that, starting on Sunday, Larry Summers, who was one of the forefront people that we thought was going to possibly get Ben Bernanke's position that he's leaving as the chairman of the Fed, suddenly removed his name and backed out. So that left Janet Yellen, who was the other party of the two top people that were vying for that position. And chatter out of Washington today now is that President Obama might not be nominating Janet Yellen. I think he's a little bit Twitter-pated by the whole Larry Summers backing out. I think there was some concern on whether or not he would be able to get through the whole Senate process, which personally I would have rather seen Janet Yellen. I think it would be better for the industry, better for the markets, better for our clients if Janet Yellen is still yet to be put in that position. But time will tell. Time has a funny way of fixing all these types of things. Speculation, though, has been widespread in this market. As far as I'm concerned, I would just as soon see the Fed start the tapering process, get us back into a grounded market, stop all the speculation, get us back into technicals, and so that we can react and give our clients the support they need in terms of where we believe rates are going and what's going to happen in the market overall. That debate of should they taper, should they not taper, as I said, that's pretty much going to come to an end. My belief is that they're going to taper more in the line of treasuries first, as opposed to mortgage-backed securities. So we'll see. Again, I'm sitting here speculating as well. So the mortgage bankers weekly application data comes out again tomorrow before the Fed meeting and before the press conference is released tomorrow afternoon. So keep your ear in tuned. We'll see what happens. We'll see what Mr. Bernanke's comments are. There'll be some of his last before he leaves office at the end of the year. The markets started off with a little bit of a glimmer of hope this week, and I think it came on the announcement that Larry Summers was backing out. It was widely believed that he was a little more dovish in that area, that would have caused the markets to react negatively. So we're that I think is much more conducive to our part of the industry, if you will. Moving on to just some notes in terms of programs. We're one of the only lenders that is offering a new FHA back to work mortgage program that allows a 1-year seasoning time on bankruptcies, deed and liens, short sales, and foreclosures. There are some windows they have to jump through. Overall, you have to have a 20% reduction in income, and since that time, you have to have established a perfect pay history. And there's a couple other things that I can share with you in person. But it's a great opportunity to go back through your databases, back through your turn downs of those type of loans, and it's some great opportunity to get some folks into a home that have been waiting on the sideline. Additionally, we've got a new jumbo program that is very competitive. We have some options in it that we can go a couple of different ways depending on LTVs and DTIs in terms of being very competitive in rates. So give us an opportunity to take a look at some of those with you whenever you get an opportunity. So that's it. I'm going to cut that off, and hopefully if you like the video better than the email, you don't get the charts and stuff that we provide, but I'll provide those in a quick email that you can share with your clients and at listing appointments and those kind of things, just as I have in the past. So thank you for the business. If you haven't taken us for a spin yet, give us a try. We'd love to earn your business. Have a great day. Bye-bye.